The cryptocurrency market has always been a battlefield of innovation, speculation, and transformation, but heading into 2026, something feels fundamentally different. The noise is quieter, the projects are more mature, and the investors who survived the brutal cycles of the past few years are now asking smarter questions. Not just which coin will pump next week, but which blockchain ecosystems are building real infrastructure, solving real problems, and positioning themselves for long-term dominance. That shift in thinking is exactly what separates the investors who build generational wealth from those who chase hype and end up holding empty bags. The projects worth your attention in 2026 are not necessarily the loudest ones. They're the ones with growing developer communities, institutional backing, real-world utility, and tokenomics that actually reward long-term holders. So let us walk through the most compelling crypto assets to watch and potentially invest in as we move deeper into this new chapter of the digital economy. No serious conversation about crypto investing begins anywhere other than Bitcoin. After the approval of spot Bitcoin exchange-traded funds in the United States and the completion of the 2024 halving event, Bitcoin entered a new phase of its existence. Institutional capital flooded in at a scale never seen before. Asset managers, pension funds, and sovereign wealth funds began treating Bitcoin not as a speculative gamble, but as a legitimate store of value and a hedge against currency debasement. Heading into 2026, Bitcoin's narrative has only strengthened. With a fixed supply of 21 million coins and a mining reward that continues to decrease over time, the supply shock dynamics are undeniable. Demand is rising while new supply entering the market is shrinking. That fundamental equation has historically preceded some of the most explosive price appreciation in Bitcoin's history. Beyond price, Bitcoin's security model remains unmatched. Its proof-of-work consensus mechanism, backed by more computational power than any other network in existence, makes it extraordinarily resistant to attack. For investors looking for a foundational position in crypto, Bitcoin remains the single most defensible asset in the entire space. It is digital gold, and in 2026, the world is only beginning to understand what that truly means. If Bitcoin is digital gold, then Ethereum is the digital economy's operating system. Ethereum powers the vast majority of decentralized finance applications, non-fungible token marketplaces, decentralized autonomous organizations, and smart contract platforms that have redefined how people interact with money and ownership. Since transitioning to proof-of-stake through its merge upgrade, Ethereum has become a deflationary asset under high network usage conditions, meaning that more Ether can be burned through transaction fees than is newly issued. This mechanism fundamentally changes the supply dynamics in a way that benefits long-term holders. In 2026, Ethereum's continued development through its roadmap, including improvements to scalability through sharding and Layer 2 integrations, positions it as the backbone of the next generation of internet applications. The developer ecosystem surrounding Ethereum is the largest in the entire blockchain industry. More developers mean more applications mean more users, and more users mean more demand for Ether to pay for transactions and services. Institutional interest in Ethereum has also grown substantially, with Ethereum exchange-traded funds gaining traction and providing traditional investors with regulated exposure to the asset. For investors willing to hold through volatility, Ethereum represents one of the most compelling risk-adjusted opportunities in the crypto space. Solana has had one of the most dramatic comeback stories in all of crypto. After being nearly written off following the collapse of FTX in 2022, Solana rebuilt itself from the ground up, attracting a new wave of developers, users, and projects that chose its high-speed, low-cost infrastructure over slower and more expensive alternatives. By 2025, Solana had firmly established itself as the #1 blockchain for consumer-facing applications, meme coin trading activity, decentralized exchange volume, and mobile-first crypto experiences. Its transaction throughput, capable of processing tens of thousands of transactions per second at fractions of a cent, makes it the most practical chain for everyday use cases. Heading into 2026, Solana's ecosystem continues to expand at a remarkable pace. Projects building on Solana range from decentralized finance protocols and gaming platforms to real-world asset tokenization and payment infrastructure. The Solana Mobile Initiative, which brought a crypto-native smartphone to market, demonstrated the team's ambition to integrate blockchain technology into daily life in ways that feel natural and accessible. For investors looking for a high-growth opportunity with a proven and resilient ecosystem, Solana deserves serious consideration as a core portfolio holding. Most retail investors overlook Chainlink because it does not generate the same kind of viral excitement as newer tokens, but that is precisely what makes it such an interesting investment. Chainlink is the dominant Oracle network in the blockchain industry, meaning it is the technology that connects smart contracts to real-world data. Without reliable oracles, decentralized finance cannot function. Price feeds, weather data, sports results, financial market data, all of it needs to flow into blockchain applications in a trustworthy and tamper-resistant way, and Chainlink is the infrastructure that makes that possible. In 2026, as the tokenization of real-world assets accelerates, the demand for Chainlink services is expected to grow exponentially. Every tokenized stock, bond, real estate asset, or commodity needs accurate and reliable data to function properly on-chain. Chainlink's cross-chain interoperability protocol, known as CCIP, is also positioning the network as a standard for communication between different blockchains, which is a massive market opportunity as the multi-chain future becomes reality. Chainlink's partnerships with some of the world's largest financial institutions, including major banks and asset managers, signal that traditional finance recognizes its value. For investors who want exposure to the foundational infrastructure of the blockchain economy rather than speculative tokens, Chainlink represents a uniquely compelling opportunity. While Bitcoin, Ethereum, and Solana dominate the conversation, a new generation of Layer 1 blockchains is quietly building the infrastructure for the next wave of decentralized applications. Sui and Aptos, both developed by former Meta engineers who worked on the Diem blockchain project, bring a fundamentally different approach to blockchain architecture using the Move programming language. This language was specifically designed for safe and efficient asset management, making it particularly well-suited for financial applications and gaming. Sui has shown impressive growth in its decentralized finance ecosystem, with total value locked climbing steadily and a growing number of high-quality projects choosing it as their home. Its object-centric data model allows for parallel transaction processing, which means it can handle complex applications at scale without the bottlenecks that plague older blockchains. Aptos, meanwhile, has focused heavily on enterprise partnerships and institutional adoption, positioning itself as a blockchain that traditional businesses can build on with confidence. Both networks are still in relatively early stages of adoption, which means the risk is higher than with more established assets. But for investors with a higher risk tolerance and a longer time horizon, allocating a smaller portion of a portfolio to these emerging Layer 1 ecosystems could yield substantial returns as their ecosystems mature through 2026 and beyond. Understanding individual assets is only half the equation. The other half is knowing how to structure a portfolio that balances risk and reward in a way that aligns with your personal financial situation and goals. A sensible approach for most investors involves allocating the largest portion of a crypto portfolio to Bitcoin and Ethereum, which offer the best combination of liquidity, institutional support, and long-term staying power. A meaningful secondary allocation to Solana provides exposure to a high-growth ecosystem with proven product-market fit. Smaller allocations to infrastructure plays like Chainlink and emerging Layer 1s, like Sui and Aptos, add asymmetric upside potential without overexposing the portfolio to speculative risk. Dollar cost averaging, which means investing a fixed amount at regular intervals rather than trying to time the market, remains one of the most effective strategies for navigating crypto's notorious volatility. It removes emotion from the equation and ensures that you are accumulating assets consistently regardless of short-term price movements. Security is equally important, using hardware wallets to store significant holdings, enabling two-factor authentication on all exchange accounts, and never sharing private keys or seed phrases are non-negotiable practices for anyone serious about protecting their crypto investments. The 2026 crypto landscape rewards those who do their research, stay patient, and build positions in projects with genuine long-term value. The opportunity is real, the technology is maturing, and the investors who approach this space with discipline and conviction are the ones who will look back on this period as one of the most transformative financial moments of their lifetime. If you found this breakdown valuable and want to stay ahead of the curve on everything happening in the world of crypto and digital assets, please give this video a thumbs up. It genuinely helps more people discover this content, and consider subscribing to the channel so you never miss an update as the market continues to evolve.